Is trading and investing that simple how these US investing champions or super traders make it look like? Well, turns out it is. And we normal traders are just fucking complicating it. I studied 5 years of US investing champions, and the thing is, every one of them uses the same playbook. Forget the fancy indicators, the complicated strategies, the algorithm bots, yada yada yada. In this video, we are going to see the exact method on what these guys are using. And the thing is, it is so simple. I read the statements, I saw all the interviews, I dissected all the charts of these awesome traders, and now I'm giving you the exact playbook. We're going to study traders like Oliver Kell, Mark Minervini, J. Law, Tanmay Khandelwal, Govardhan Gajala, George Kajak, who went on to achieve some mammoth-sized returns in the US investing championships. So let's go. First comes their stock selection method. Turns out these guys never ever pick cheap stocks. Every investing champion from Mark Minervini to Tanmay Khandelwal, these guys, what they're screening for in a stock is the earnings momentum, the sales growth, and sector leadership. They want to pick the market leaders and not the laggards. And most of the stock selection is rooted in the CANSLIM strategy by William O'Neill. Now, what the hell is CANSLIM strategy? Well, each letter in the CANSLIM stands for a certain criteria. The C stands for current earnings. Here the traders are looking for quarterly earnings share, EPS growth of plus 25% compared to the same quarter the previous year. What this does is a strong earnings signal strong demand in the stock. Then comes A, the annual earnings. The annual EPS also should be growing. What the annual EPS does, it shows consistent growth, which in turn shows a sustainable business model. The N stands for new products, services, or highs. A company should have something new fueling the growth, like a product, service, management, or entry into a new market. The third is supply and demand. Few shares outstanding plus higher demand equals strong price moves. Look for stocks with high trading volume on their up days, because that indirectly indicates institutional buying. The L stands for leaders or laggards. Again, as mentioned before, they prefer buying the leaders and not the laggards. And the RS, which is the relative strength, don't confuse this with RSI, which is the relative strength index. This is a good metric to have while judging the leaders. So what is RS? Simply put, it is an indicator which gives you an idea of the stock, if the stock is actually beating the index or falling behind it. And RSI, well, you already know that it's overbought or oversold. Now I stands for institutional ownership. Strong ownerships by mutual funds, hedge funds, etc. again proves strength of the stock. Again, it differs as well. Too little ownership equals too less demand for the stock, and too much of ownership equals no room to grow for the stock. So balance out here is the key. And M stands for market direction, because even the best stocks will fail in weak markets. I've had the worst experience this year. Use charts of major indices. It could be S&P 500, NASDAQ, it could be Nifty 50 in Indian markets. It could be anything. Just charts of the major indices to confirm your uptrend before buying. And the second thing is, what time frame or common patterns are these guys using? Believe it or not, these champions are using the most simplest patterns. Breakout from consolidations, base formations, and cup and handle patterns. These patterns, these common patterns are literally their bread and butter. They live on breakout patterns from tight bases. Oliver Kell, for example, uses multiple time frames from 5 minutes all the way to weekly and monthly charts. So he can confirm whether the structure is strong on higher time frames and his triggers are precise on the lower ones. J. Law uses moving averages, believe it or not. He'll use a 10, 20, 50 everywhere, and sometimes even the 63, the 150, and the 250 dailies, which line up with the quarter 30 week or 50 week of the hidden confluences. And the patterns they're obsessing over: volume dry ups before breakouts, prices respecting these moving averages, and the classic retest and reclaim of breakout levels with MA confluence underneath. And this simple thing can be deadly effective. The third thing is, what indicators are these guys using? Turns out champions are really light on indicators. Most of them just stick to the basics: the price, volume, and moving averages. Govind and Oliver always hammer at the same point, that you will see volume contraction before your breakouts. And that is one of the biggest tell that the stock is going to just surge in momentum. J. Law out here reminds us that moving averages are just one of his edges in his strategy and never relies completely on them. So when it comes to entries, it's all about precision and pass. Govind keeps it super simple. When the stock moves his way, the buy price automatically becomes a stop loss. There's no hesitation over there. Oliver looks for clean base breakout patterns or the pullbacks towards the 10 or 20 EMA, and with the risk just tucked underneath it. This way his losses remain tiny and the rewards can be big. And J. Law, he only trades when multiple edges line up in his setup, like the breakout retest sitting right on the trend line support with the 20 and the 50 moving averages underneath. That's why he caught big runs in stock names like the SMCI and the Palantir. Also, he sells into strength, and if the support breaks, he's out. Now, what risk rules do these guys use and what is their stop loss? For champions Champions cutting losses is non-negotiable. They usually slash their losses at, and remember this number, at around the range of 5 to 8%. You wanted a holy grail? This is your holy grail. Just keep your stop losses really, really small. Like Govind Gajala's breakthrough, what he said in his interviews literally came from that when his stock starts moving into his direction, he just makes the buy price his stop without any hesitation, without any wiggle room. And Tanmay, his simple rule is on any single trade, never risk more than 1% of your capital. Now let's talk about sizing and capital allocation. So when it comes to sizing for these guys, it's all about time and discipline. J-Law, for example, only scales up when multiple edges line up and when the market itself is in sync. He's big on using profits to fund his own risk, never putting his capital in danger when he's out of sync. Oliver, for example, he swings hard when he sees conviction in setups like the base breaks or the moving averages squeezes. But he always keeps his 10 EMA and the 20 EMA police his risk. And Govind only started sizing up when he had a clear, repeatable playbook. He has literally screenshotted all the charts which he's played on just to build that playbook. Now let's talk about the sectors which these guys play in. Now champions, they don't stick to pet sectors, the favorite industries that they like to play in. They actually look at the theme, they study the theme and rotate it accordingly. Here's a screenshot of theme examples from Oliver Kell's book, Victory in the Stock Market. Similarly, George Kajak also did the same thing, riding the trend and stepping aside when things turned. Tanmay does it too. He's constantly re-evaluating, and if the valuation thesis feels off, he simply exists, even if the price feels right. The lesson out here is to treat it like a business and not like a hobby. Now I get the reasons for my subpar returns. Now this one is my personal favorite. How many number of positions do these guys hold at one particular time? Because I always used to hold around 100, 200, sometimes 300 stocks and just look at that jungle of stocks and think to myself, what am I doing, But the common thing between these guys is their approach to less is more. And the truth is, these champions do not juggle in 50 stocks. They focus on 5 to 8 killers. At the max, they would probably hold 12. That's it. But of course, the number of trades differ. They're entering in and out of these really good stocks which they have selected. Mark Minavini, for example, I think it's around 150 to 200 trades per year. Oliver Kell, who had a 900% return, makes about 200 to 250 trades in a year. He pyramided quickly into big winners like Tesla and cut losers out quickly, which adds to his trade count. J-Law again is more selective. It's about 100 to 150 trades per year. George Kajak around 100 trades. So Govind Gajala is a day trader and he trades 1 to 3 stocks per day, which stacks up his trades up to 200 to around 500 trades per year. And Tanmay Khandelwal, he uses a long-term approach, so it's around 60 to 100 trades per year, which he's willing to hold for around 6 to 8 months. The key takeaway out here is capital is finite. With only 5 to 8 slots, every position has to earn its seat. If a new A+ setup arrives, they'll just cut the lagarde, even if it's not losing. And this, they do it to free up their mental space and their cash. See, premature exits, they aren't a mistake. They're capital rotations. Remember this very, very well. You'd rather move in with a stock breaking with volume than, babysit a stock that is moving sideways. So defense always comes first. Losers always get sold quick. And even the mediocre winners can get dumped if something really good shows up. So what is the common DNA of what these champions share? Here's what really sets them apart. They go for leaders with the strongest earning powers in the strongest sectors. They buy the base, the breakout, and then they ride the 10 or the 20 EMA, always looking for that dry up in volume before the big expansions. Risk management is everything. Tight, very, very tight stop losses. And their charts are super simple. Price, volume, and moving averages. They'll use multiple time frames, they'll use the MA confluences as supporting edges, but never as their main signal. And the obsession, it's in the review. Screenshots, post-mortems, written playbooks, fewer trades, but of course, way better trades. So yeah, the secret isn't in some magic indicator, in some holy grail strategy. It's simply repeatable pattern recognition, tight risk, edge stacking, and lots of humility, especially when things are going sideways or not in your favor. So if you guys want more, comment which champion I should deep dive next. I'll break down their exact setups, entries, exits with chart markups. Please say J-Law because I've already made his content.